Yo, 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 what's up, guys? Raul, Austin, Zaytoven, Chris, username. How y'all doing, man? What's up, Daffy? Adamos. Make sure you have some water. Definitely sucks to not have water. I'm a huge advocate of water. What's up, Jackie? What's up, Robert? What's up, Shibu? Hey, Sonia, how you doing? No problem, man. And yeah, I'm here. I wanted to keep doing Sunday streams every week, but it's really just doing the same thing. So I'll probably try to do like one of them a month, because these levels are that good for that long, if not longer. But it is kind of nice to go back and just kind of reset everything, everybody be on the same page, especially with the new influx of members and just people who have been new to this channel. I just kind of want to start over so we can all kind of be on the same page, clean slate. What's up, Sandal? How you doing, man? Give Bacon. I love the name. What's up, Tulip? Pain fan, Julian. What's up, Deuce? And yeah, I'm going to start in like a minute or two. I just want to give people time to actually join in. I was sitting here refreshing YouTube thinking it was oh, an hour ago. Yeah, I tried my best to post what times it was. I know time can be pretty confusing. We'll start here in a couple minutes, or a minute or two. Just giving people time to join in. How's everyone's weekend so far? Anybody get any cool football games to watch, or UFC this past weekend? Some Muay Thai, some golf, some soccer, of course, some European football. Oh, the post. Yeah, I forgot I even did that. I'll make a look at that. I didn't even know if anybody even interacted with it. I'd never done, or I mean I have done, but I haven't done them when my channel's active. Those like announcements that are on the channel. I don't even know how people see that or not. If it just like pops up in your inbox, or do you have to go to my channel to actually see that? Yeah, let's see how it did. Yeah, 1 like on it. So and I didn't really expect it to have any likes because I don't even know how people see that. I just thought it was a good announcement channel. Happy Sunday. Dolphins tonight. Yeah, I'm going to definitely catch the Dolphins game. That'll probably be a really good one. I really need Waddle to not do that good, and then I can win in fantasy football. World Cup letdowns. Cowboys just escaped. Yeah, my Texans almost had them there. That would have been crazy to get a second win of the year. Sunday, you were off, but I had to replenish the fridge for the fam. Hey, it's always nice to get some grocery shopping done this weekend. Some laundry, some chores. It was good, Sonia. Thank you for asking. Facts. Yo, Sack Lunch. You were again my best friend. Patty did not win that fight. You know it, brother. That was another Holly Holm turnaround decision right there. That's funny you said that. Rigged. Portugal getting eliminated from the World Cup. Rip. Hey, if Argentina ever gets kicked out, Andre, tag Dylan. You can laugh at him. It was good post in local times. Bueller saved my brain. This pack week has been very busy. Yeah, and I'll continue if I do any more time posts. Like I try to like, you know, preemptively give y'all what time. I'll try to type out all of the, at least the United States time zones. I know that we have viewers from outside of the United States. Hey, thank you, Jake. And we're going to go through a lot of those levels today. And yeah, be sure to drop a like, guys. I'm really not pressed, though, for pushing for likes on the Sunday stream. These aren't really going to be a huge thing I want to incorporate into the weekly routine. But I want to try and aim for doing at least one of these per month. Therefore, you guys are kind of on the same page as me. Levels-wise, you understand where we're coming from. And again, just like my little scratch pad here on the screen shows you, be sure to check out the workshop number 11 video. That video really is, I mean, I put a lot of effort into that video because I wanted it to be a one-stop shop video. I don't want you to have to click through 30 videos to kind of catch up to what we're doing in stream. I wanted you to watch just one really good quality video, and then you're instantly caught up. You know, you may not be caught up mentally, like you still need to practice more, but at least giving you the information. I'm not having you click 60,000 different links. So definitely check that out if you're new here. I work for the U.S. but stay in South Africa, hence why the time zone for me... Oh, wow. Very impressive, Bacon. Well, I appreciate you being in here, regardless of it being... I'm sure you're in tomorrow almost. How many hours are you ahead of the United States? I know my friend Jason's like 6, 7, or 8 hours ahead of me in England. So you're probably close to that. What's up, Kaizen? Mikey, hey, Bueller, love what you're doing. Thank you. No problem, man. I'm really glad to be up, just to be here. It's already 1 a.m. Yeah, you're already in December 12th. That's what I figured. Well, you're a legend, Give Bacon. Let's give a round of applause for Bacon for being here. What's up, Carl? What's up, Shibu? Future's open. You can do a 24-hour notifying your channel. It reaches all the subscribers. Let's click a notify me. Oh, okay. I'll do that then, Sandollar. I'll figure out where that is and I'll get that going. What's up, Ruth? Alright, looks like everybody's corralled in here enough. That's totally fine. Let's jump into this. So before I start, because I don't want to have to repeat this again, and I'm pretty good at repeating things, so I'm trying my best not to, because I tend to go too long on things instead of just continuing forward. But in the beginning of this, I just want you guys to know, when we do these Sunday streams, the entire focus is preparing the levels. I'll go through some good, breakdowns and stuff, but overall, what we're doing here is getting the levels. So I'm going to go through the dollar, I'm going to go through SPY, and I'm going to go through the Qs on the bigger time frame. Then I'm going to switch them all over to the smaller time frame. I'll probably go interval with them as I'm going. We'll show you how to get bigger and smaller time frame levels, and then we're going to go through the list of Apple, Microsoft, Amazon, Tesla, Meta, Google, AMD, Nvidia, Netflix, and Square. And there is a little bit larger of a watch list I go through every day, but this is the majority of the core tickers that I like to look at each week in the streams. And it's not necessarily because I have favorable trading in them. It's just they move really good. They have really good options premium. They move really good in the options premium. So this is why I'm choosing these. There are other ones that I could accommodate for. I always get a lot of questions about like Baba, Neo, Coinbase. Everyone's always asking, what do you do about a stock that has new lows? I'll be sure to go over that at the very end, because there are a few people out there who asked me that and I didn't get back to you. So I'm very sorry about that. But I will go over that information here in today's stream. So let's go ahead and jump to it. No music today, sorry. I got a jam on my own while I'm doing this, but the music will be back up during the week. So please leave a like on the stream. Please drop a subscription. We are less than 50 subscribers away from 4K, which is crazy because I've literally gotten over 1,000 new subs this past month. So I really do appreciate each and every one of you. You guys are the reason for my continued motivation, and I really do thank you guys for that. But let's jump into this. So first off with the dollar, I don't really like to chart this on the daily a lot because there's just too many levels. So I end up going out to the weekly, and it gives me a lot of really good levels of support and resistance using the same exact technique that I always use. I never really stray away from it. So let me go to SPY first, and then we'll come back to the dollar. Therefore, you have a little bit of breakdown so you don't feel a little bit confused. So let's start with the bigger time frame levels on SPY. So yes, we could go out to the daily. We could go out to the daily and get all of our smaller time frame levels. That's what we're going to do. I'm going to show you all that. But a really awesome thing is to go over to the monthly and get less levels. And this isn't to day trade with. You can day trade with them. It gives you good TA, and you guys see me do this during the week. But the big thing is that you want to switch over to the daily after we chart these levels, and you'll have a really good, bigger time frame setup. You don't have to worry about, adding on indicators or figuring out what's the best levels of support and resistance. These levels are good in setting stone, so you don't have to worry about them. And I'm going to start way back here. But again, guys, before I move on, an emerging candle, and everybody always asks me this, how can you break this down? There is no way to break it down further. An emerging candle, in short, is like a break spot. Think about driving really, really, really fast and you're at a red light. That's a crucial spot, and that's what price does. Price loves to get up to a certain spot, stop, and whether it continues or not, that stopping point is a solid point of support and resistance using price history. That level of price history is going to be very effective moving forward. Now, will it be effective the next day, the next week, the next year, the next 10 years? We don't know. Price could completely sell off from there and never reach that price again until, 30 years down the line or whatever, and so that's what these levels of price history are so strong for, because you don't have to worry about readjusting them or going down and fixing them. It's just go at it. You're good to go. So what I do when I grab an emerging candle, again, EMERGING, emerging candle, is grabbing the close, the meat of the bone is what I like to call it, the close of the green candles. Again, and this seems very kind of, chaotic at first. You're like, wow, it's really just that easy? It is just that easy. So you're going to end up grabbing the tops of your green candles, no matter how close they are. And then we have a rule here. You get up to a candle that's higher, that's red, and it's like, it's a no-no. Do not touch that. Would we grab this? No, because it's not a new high. So what you want to find are green candles pushing a new high. The first time that price has ever penetrated and held that spot to that extent is what we're basically grabbing. So I'm going to continue forward, and we're on the monthly time frame. This is for me to view on the daily time frame, to view on the bigger time frames. And it might seem like, oh wow, this is super easy. No way this is that effective. Trust me, if you've gone through a lot of our streams, you've realized that, wow, these levels are pretty crazy. And again, it's just price history. There's no special tricks here. And I'll show you another trick here with the halfway point. Let me just finish up this chart real quick. Whoops. And the reason you're seeing me click these levels so quick, just because I know I'm going to get asked by a few people afterwards, click on your cogwheel there at the kind of middle top right and go to Snap Drawings 2 and change that to OHLC. It'll normally be on none. I've even seen some people's default to bar center. Change it to OHLC, which stands for open, high, low, close. Click apply, click OK. And that'll give you everything you need. But let's keep moving forward. So let me auto zoom back out so I can see what I'm doing. So we got a level there, we got a green candle there, green candle there, green candle there, emerging candle, and our last emerging candle. So what else, and let's see who all knows this, what else can we add to this chart when there's a large range? Does anybody in here know from my past streams what we can add in between here without making anything up? Again, we don't want to add information to this chart that is random. We want to add consistent info that will hold up in the future. What can we do to these larger ranges to fill up that space? Exactly, fibs, the 50 fib, a fancy way of saying the halfway point, right? So knowing that we have consistent levels, anytime we have a large range, like right here between 326.52 and 349, you know, in the future, it wouldn't really be fair to say, okay, guys, once we break above 326.52, let's target 349. Like, hold up, chief. There's definitely a level in between there. Let's not go too far. And this is kind of the thinking on why we add that in between that range. So we're not giving ourselves unrealistic goals level to level. So let's grab our Fibonacci retracement. And just before I do this, let's go to the settings of this because I know I'm going to ask this. Click Edit Properties. The only ones that I turn on are the 0. Of course, you have the 1, which is the outer borders, your top and your bottom. Let me move this so you can see it. And then we have our golden pocket, which is a Fibonacci between 0.618 and 0.65. This is just what we go off of for the golden pocket. A lot of algos are known for buying in this spot, but I don't like to promote it that way because then people are like, oh, we're trading like computers. Like, no, we're not. We're trading effectively. But this is the golden pocket. And then the fancy halfway point is 0.5. Of course, out of 0 and 1, that would be 0.5. So these are the only ones I have on. I color-coded them to be orange for halfway and then yellow for gold. Ha ha ha. But click that. Click OK. You can save it as default. Let me go back to that so you can see it. Down here, whenever you change the colors or you change, you know, whatever pocket you're looking for, click Save as Default and then click OK, and you can kind of have it set just like mine if that's what you're looking to do. So just getting that out of the way because I know some people ask. But what you're going to do is go from emerging candle to emerging candle since this is the range we have too large of. And let's add that halfway point, though, the good old fancy orange level there. And that's going to be perfect. Anytime you see a super large range, something you're not really comfortable with, you don't think is possible, add yourself a halfway point. I'm going to go ahead and add one here as well, even though I don't think one is needed. Just to get it done. Let's get another one in between here. That's a little too large. We'll get one here as well. Why not? And you'll see me do this on pretty much every chart on the far left when we get to them. But again, we're on the monthly to help us out for looking on the bigger time frames. We're doing this on the monthly to help us looking at the daily time frame. So here in a second, we're going to switch over to the daily. I think we're good after this one. And let's go review it. Let's check out the daily time frame. Auto zoom in. Yeah, this is going to look like junk, but it's not for this time frame. It's just to prepare it for a different time frame. Jump down to, let's just say, the year daily. And you'll see price actually does coincide inside of these support and resistance levels very well. From the 479 for the 480s, basically, when we had our all-time high, basically, we came down and we tested 428s. We came back up. We rejected an old support. You know, and this is what I like to use for looking for patterns with positioning. I don't really want to look for, you know, I wouldn't want to find a bullish engulfing way up here. I wouldn't want to find a bearish engulfing down here because this is down in the dirt where probability is not really that good for risk reward, and vice versa for when we have the engulfing up top, right? So I like to look for patterns with positioning. You can use EMAs, the 9, the 21, the 50, the 100, the 200. These are great to have with just guidance to look over the 9, buy it to the 21, and, you know, vice versa for coming down. But overall, what I'm looking for is patterns with positioning. You can see during that entire consolidation we had, we finally got an inside bar, which a lot of these were inside bars, and then we had a close under, giving us decent indication that sellers do want to take control back to a further support, possibly this area here. They ended up doing that over the course of one day. That's not always going to happen, of course, but that happened in this scenario. And this is what we like to look for patterns with positioning. It just kind of gives me good levels to look at for just checking out the bigger time frame, because a lot of the time we'll switch over to this. Oh, and I did this on the wrong time frame. I'll fix that. But a lot of the time we get caught up on the smaller time frames. We forget what's going on in the bigger time frames. We just completely throw it out the window because it's not as relevant to us because we're tunnel vision. We have tunnel vision on the smaller time frames. And what this does is helps you get a little bit more confidence and confirmation on what's possible. So like going into tomorrow, instantly I can tell you that if we open lower, we really need to test this support. If we end up breaking this 391.60s, we're most likely going down to 388. And this is noted on my other time frame chart. Let me see. You can see it here. It's the exact same levels. We're dealing with 390 and 388. You can see I added a couple smaller time frame levels, but it's essentially the exact same thing. As we're moving on, we can add what we think is necessary. And without even really, looking at it that long, you can already see if we end up cracking this support here between this old resistance where we popped up above from the CPI, where we held on top, and where we're holding recently, if we end up cracking this, we are 100% going to test 388, possibly 385, and we have 380 right in sight where we had a part of our gap, our bullish kicker here, take up from that CPI data. So we're going to have a lot of craziness coming forward, and if we end up defending the support, you can say, okay, well, we can look for bounces off one of these couple areas back into the 396, and over 396, we can look for 400, 405, 407, 410, 412.50, 415, 420, so on and so on and so on, adding your psychological levels as well. And this just gives you good short-term planning on the bigger time frame without making anything too, complex, too in-depth. How big would the gap have to be to use the fib? It depends. Again, I always like to do it when I think something is, well over $10 when I'm using the monthly. If I'm on the smaller time frames, you'll see me doing it when I think there's a too large of a range of $5. It really depends on what your comfortability is with it. I try not to add too many of them, but you'll see me as I go on. Every chart is different. But let's go back out. And so is everybody on the same page? We understand what the thinking process is behind this. And we're going to do the same thing for the Qs real quick. And then I'm going to go back to the dollar. We'll do it for the dollar. Or actually, let me go to the dollar first. So why we chart the dollar is because this is there is no such thing as a perfect opposite of SPY. There's no such thing. So what do a lot of people like to use? Some people use VIX, which isn't really even close to perfect. The dollar is probably the closest thing to being perfect. And what we like to use this as is short-term pressure. So if this is ever holding a support, I have to understand going into the market that if that continues to hold support and gets a good bounce, that's going to bring some bearish pressure on SPY, Qs, and a lot of the tickers that we all love to look at, right? And vice versa. If I see a breaking support, I'm going to understand, oh, wow, there should be more bullish pressure arriving on SPY and a lot of the equity market. That's what it is, the equity market. So it's just a good kind of excess thing to use as double confirmation with the market. It's not something you should use to 100% line up, oh, green candle, I'm getting puts on SPY. Like, it's not going to work that simple for you. It's just to kind of use outside of it. So that's what I like to do. Plus, I have a lot of currency traders that like to follow a lot of what we're looking at. So let's jump into adding levels on the dollar now. We're going to go out to I think it was the weekly I do? Yeah, the weekly. And this is a good one for a lot of people who've been asking questions on, well, what happens if there's no new highs? And that makes sense. There's not going to be new highs on every single chart. So let me get this done real quick, and we'll go look at it. So we're getting just emerging candles. And look how far back I am. Look at the year it is. It's 2000 right here. It's April of 2000 right here. And up here I'm in the kind of June, July area of 2001. So it just goes to show you how strong and effective these levels are. And these are the same levels I've had marked on my streams for multiple weeks now. I do see a couple large ranges, like right there. Not really fair to say that if we go above, 107.50, that it has to go to 110. There is a level in between. I see another decent large range right here. Remove. That looks fine. Let's go down a little bit. So we broke a new low. We kind of held our low here. So I'm going to add these two candles. They're not emerging candles, but they are great candles. We'll get a couple more down here. We'll get this true low. The candles from that low. And that should be fine. We're at 92. That's a pretty good distance from current price. And we have levels up to 120. Pretty good distance from current price. And then we got to our daily time frame, which is what it's meant for. And a lot of the time you guys have seen me have, I think, this chart up. Oh, I deleted it. But a lot of the time I've had this chart put up from, I think, the 4 hour. But we have a trend line in this general vicinity. Hold up. That's not it. It's like from here. Yeah. And we end up breaking it a long time. I've had this drawn on my chart for a while. I don't think I'm going to keep it added. I was just showing people what kind of pressure was building up before we had the bigger decision. We end up getting a very nasty fall, a slight buy reaction to defend this support here at about 109.50s-ish. And then we end up cracking that next day, and that was when the market was rallying. Market ends up continuing to rally, dollar continues to fall. Market starts getting a little bit of a base, slowdown, indecision, dollar starts basing out a little bit. So basically what you could say is under 104, we are most likely headed to the middle of this range, possibly 102, which would bring extra bullish pressure on the equity market. So we need to keep looking out for that. Second is if they continue to hold support basically between the low of this wick to the meat of this level that we have here from that far left, that price history level at 104.60, this is going to give us good extra confirmation that bears are actually trying to come in back to the equity market. So if we end up bouncing here, this gives me good ideas that, okay, we could possibly look for better bearish signals on the equity market. So let me finish this chart up, but that should be it. It looks like I have one level missing here. Let's go ahead and fix that, because that's too large of a range. Add that level. So you don't have to go back to the far left. If you really want to, you can just cheat like I did and add it there in between. But yeah, it looks like if we crack 104.60s and whatever this low is here, we can add it if we want. Basically 104s. We end up cracking 104s. We have to watch the 103.25 and possibly 102, which would bring us down to the 100 level. We have a level at 99.99. Let's just basically say 100. So we'll have a lot of different ideas to look out for. And what the point of these levels is, and what I really like about them, is not only are they consistent, they keep you non-biased. You're never sitting here going, oh, okay, well, bulls look really good here, and then that's it. No, there's, okay, well, if bulls continue to defend 104s and we get some good basing, bulls should have good risk reward to take price back up, and vice versa. If we end up cracking 104s, this gives good risk reward for sellers to take us down lower. Always have a plan for both sides. There's 0 point in just saying one for one side or one for the other side and ignoring the other. So don't be biased. It's definitely going to be helpful for you on bigger and smaller time frames. Let's jump down to the Qs. We'll do the bigger time frame chart on this one. Let me actually click on the right one this time. And yeah, I'm going to have to go back and fix this chart because I messed it up. I put it on the wrong drawing set tab, which that's totally fine. I can fix that in like 20 minutes. But let's get QQQ going. So we have a price way up here at about 282. So I'm going to start a little bit lower just to kind of get some things going for it. And remember, this is not for the bigger time frame, or for the monthly. This is for the daily. We're just grabbing levels on the monthly using the exact same method that we would for grabbing our smaller time frame levels. Got that. And I can see we got a decent range here. We could add a halfway point here, one here, one here. I'm definitely going to add one here, because there's a definite wide range there. But as you can see, it really is kind of personal preference. If you want less levels, you can leave it as is. If you really want to be super OCD about it, I would add a halfway point if you see a range of over $20, $15 for your bigger time frame charting. And I'd say if it's larger than $4 or $5, probably add it for your smaller time frames when we do this style of charting on the daily, but it's for the smaller time frames. So we'll continue to add those. I'm just going to add a couple more. I do kind of like this one because that is a little too wide. Delete it. Auto zoom back out. And you can see, this is not really helpful for this time frame because it's not for this time frame. It's for the daily to help us out on this time frame. So we can add trend lines. We can add whatever we want. I'm not a huge fan of trend lines. But basically, this helps me get a good sense of direction on what I can possibly look for. So I probably do need to add these halfway points, but for example's sake, I'm just going to leave it as is. But basically, 280, that's a pretty crucial spot without even having to add indicators, look at this chart that long. I can instantly tell you 280 is going to be a very, very crucial area of support this week for the Qs. So if we end up cracking 280s, there's a very good chance we're going to be coming back down lower. So we'll have to watch out for that this week. If we can defend those 280s, we will definitely be getting a decent base, which will be good for bulls, but it'll take a lot longer. So it's not going to be exciting. But now, my favorite part. Let's jump into the smaller time frame levels. So I have to clear this chart because I added on the wrong set, but trust me, I'm not erasing this. I have it ready on my other chart already, but that was just to kind of teach you how we get our bigger time frame levels. A lot of people are really not confused by that, but they don't see me do it too much because I don't have to chart it that much. I add it once. I don't really have to add it again. Those levels that I deleted before, I could leave on forever. I don't really need to mess with it. You might have to adjust, of course, if we make all-time highs or new lows, of course, you need to add enough levels, but that's a different story. So let's jump into how do we get the best levels of support and resistance for the smaller time frames. For all you day traders, scalpers, people who like taking these intraday trades, let's jump into grabbing these levels. How is everyone so far? Let me grab a sip of water. Let y'all try to answer. But how's everything so far? And again, what we've gone over so far is just the bigger time frame info, how we get a lot of our TA for helping us out on the smaller time frames. Again, whenever I add those levels on the monthly, I'm using the same exact system as what I do for the daily, which will be a lot more apparent to you, which I think this will probably click for a lot more of you. The bigger time frame stuff, you probably will take a lot longer on because it's just the kind of way of thinking. It's not like you have to be smart to get this. It's just the way of thinking and looking at it more will help you out. So that's why I'm saying it like that. Alright, so this is my favorite part. I love doing this every week. Every time I delete my charts, it kind of gives me a good mental reset, if you guys know what I mean. You know, you get that refresh feeling. This is what I get from the charts whenever I get to redo everything. So let's jump into SPY. So go out to your 3-year daily. If you want to go out to your max daily, be my guest, but the 3 years is really all you need because, well, we're in the range of the last 3 years, so you don't really have to worry about that. So the big thing is tacking down. Where are we? We're at 393. So I probably need to work up my levels to at least, 420, 430, nothing too crazy. Therefore, I don't have to redo them for a little bit. And vice versa for the downside. I could probably work down to this base of support. So what I'm going to do is I'm going to start from the top of where we fell before COVID, or where we were before COVID, not fell. And I'm going to start from there. Again, I'm doing the exact same method. Everything I'm about to grab is an emerging candle or a halfway point. There is literally nothing else for me to grab here. Ready? Emerging candle. Emerging candle, emerging candle. Oh, it wouldn't really be fair to say above 339, target 343. If we want to add a halfway point in between there, we can. If we don't like that, the wideness of that range, again, it's about a $4, almost $5 range. We can add on to that by just adding a simple halfway point. A lot of the times you'll see some of my older members say CP. It's because we normally call it the control point. It's a very good solid spot, but I'm trying to shift over to saying the halfway point so it sticks a little easy for you guys. But essentially it is a control point. Whoever has control of it has control of direction. Remove. That's a decent enough range. This is not a decent enough range. Too big. So let's add that halfway point. Remove. And let's continue to the right. Let me zoom this out so it doesn't blind us all. And remember what I said. I said I don't like to add new highs that are after red candles. Like I wouldn't add... you shouldn't normally add this one, but for this case I am going to, and I have been for every single stream I've done with you guys. But normally you wouldn't do that. Like in this case, if this level was up here and we had another green candle here, I wouldn't mark it because it's not a new high. Price has been there before. But this was like a gapped up sell-off, so I'm not really counting that one. But that's a really good spot to grab though. Oh, another halfway point. So go from that emerging candle to this emerging candle. So this one's kind of a special one, but besides this, everything's literally consistent. It's just that gapped up candle kind of messes with us a little. Let me zoom us over, pan us down, and keep going. So we have an emerging candle. We added our halfway point just now. Let's add another emerging candle, another emerging candle, another emerging candle, another emerging candle. You're going to get very tired of hearing me say it, but I promise it'll be stuck in your head by the time we're done. And things do get a little messy. You can see I'm already kind of being a little ugly with my plate here. I probably started way lower than I needed to, but totally fine. Again, the whole point of this is to get as many emerging candles from the far left as you possibly can. Let's see, we have a red candle there. New high, new high, new high, new high, and I'm finally above the 400s. New high, new high. New high. Alright, we're at about 411. I'll stop here at 412.50. Stop here at 416. So, we had a couple ranges to fix up again. We have a couple super wide ranges here. So let's try to zoom this up here so we can see them. Pan this back over how I like. And now I can see everything I need to see. So we have a pretty large range between 386 and 390.50. That's $4.50. So let's fix that. I don't really have a set rule on that. It really is kind of personal preference, but I guess $4 to $5 is a good spot. I never really thought about it like that. 397 to 401. That's a decent one. If we really wanted to add an emerging candle or a halfway point, sorry, then we could. Let's just do it for the sake of it. And this is where things get a little funky. This is where I lose some people. Let's add that halfway point. It's too large of a range. Where'd that candle go? Here it is. Alright, so let me zoom back out. This is where I lose some people. Some people get lost in this part, but it's just adding halfway points due to levels that you like. So there's a huge range between 400 and 407, right? It's a little crazy. Whoops. Now let's say after you add your halfway point, you still have a large range. What should you do? Well, you should add your fib to here, add that halfway point. Add your fib from here to here, and add that halfway point. And it'll give you very, very effective levels. So if you ever feel like you don't like that range or you still think it's a little too crazy, you can still add that. It's totally fine. Now, who can read this chart? Because if you can, you're a liar. It's very, very messy to see. So jump down to these smaller time frames. Now, are you a guy who likes to trade on the 1, the 3, the 5, the 10, the 15, the 30, the 20 minute? Are you a 15-minute trader? This really kind of depends on you. I'm going to jump down to the 5 minutes since this is what I'm used to looking at. But do this. Seriously, go down to the, let's say the 5 minute, just for example's sake. Add on 30 days or so. Don't just look at the past couple weeks. Look at what's happened before now. And you can see that on days of range trading, we do adjust the levels very well. They fight towards them. They jump to them. Great volume navigation in between. And then days on Catalyst, you know, you could see, oh, it's so boring, so boring, so boring. And then we had J. Powell speak. We had that retest. And it showed that bulls were in control because they popped up above it. They came down, held the retest. And then they decided to push up higher with good volume. So this is what we like to use. Again, navigating with volume, navigating with candlestick patterns. You know, regardless of the news or catalyst coming out, it doesn't really affect us. Okay, y'all's questions are a little out of loop, so I'll just let you just keep watching and see if it gets answered or not. So, does that make sense to everybody who's paying attention? Us going from the daily, adding these emerging candles, adding the halfway points, forward using this on the smaller time frame, where it helps us trade effectively. Again, this is not counting the BB system where I had the previous day high, previous day low, pre-market high, pre-market low, close, open, all that good stuff. You guys know the levels. But you guys understand the bigger time frame to smaller time frame aspect of this, right? Exactly. It helps to trap price. Gives us good effective levels of support and resistance. Things we can trust. Again, because we want to have a routine we can trust. Because you can't really jump into the market with zero confidence. So you need to have some confidence in what you're doing, what you're charting, what's making sense, right? So everybody understands where we're at? I wish you would review the risk reward for either side like you did earlier. You're on the daily chart. I thought month or week. Okay, well, you need to go back in the stream, pal. It looks like everybody else is on page, though. All right, cool. So I'm going to continue forward. It looks like a majority of you are understanding what I'm putting down, so it's good. And thank you guys for not asking dumb questions that are kind of interfering with what I'm talking about. It kind of doesn't make sense to ask about one thing when I'm covering another. So I appreciate some of the breakdowns and questions. Exactly, Nick. You got it. Intraday trading, we get the zones from the daily levels, and swing, we get them from the weekly. Exactly, you got it. It doesn't make sense at first when you see me do it once, but as you start to see it more, it's like, oh, okay, never mind, I get it. Using less for bigger. But yes, Nick, you got it. All right, looks like all of you got it. No problem. And back to Big Stilk. If you're looking for risk and reward, you're looking in the wrong spot. You need to have the right levels first. 2, then you need to start looking for those types of entries. A 40%, and I'm going to go over this, but a 40% entry, and let me just look at a random level here. Let's zoom over here. So let's say price is right here, right? There's a level here, right? It's whatever that is. Let's say price is consolidating here. All right. Let's say it breaks. This is what we call a 40% entry because you have price breaking and you have rising volume. Let's say volume was doing this during this drop. You got some lowering volume as it was rising, some weak volume, and then as it came back down, it had rising volume, right? You started getting rising volume bars popping up down here like we do down here. This is what we would call a 40% entry. And this is I call it a 40% entry, but it really is just an initial breakout. A lot of you guys know what orb is, open range breakouts. That's all this is. It's just an initial breakout. The first time price decides to push out of the spot that you were looking at. In this case, it's this yellow line I have going horizontally across the screen, right? So that's a 40% entry. That's an initial percent entry. Why I call it the 40% is because you should have 40 out of 100% confidence that your trade has very good probability. So this is what a lot of scalpers like to look for because you can get it really really quick, and you can get out really quick. You're just looking for a quick move under a support or over a resistance, and you're trying to make it to your first target or just to a quick level that you have in that general area. So that would be a 40% entry. This is what scalpers like to target. A more slower day trader would like to target an 80% entry. This is when price not only breaks that initial breakout, but comes back up and either does one of two things. This is where I might lose some people, but it's totally fine. The more you watch these streams, the more you're going to catch up to what I'm putting down. But you're either going to get a perfect retest of the support in which you fell from, and then the price pushes away. This is where you look to get in, keeping your stop loss slightly above, giving you really good risk reward. So big still, pay attention. 80% is 80% out of 100% confidence that that is going to continue in that direction because you've set up a good risk-reward plan. Again, you're not just buying the first time it's breaking. You're buying it as you have weak volume, bring price back up, and you're buying the potential look that bears are just looking to retest this to bring us down further. And then the third type of entry, which I don't have to cover right now, is the buy the dip, and this is when you're looking for... Well, Friday was a horrible example, but this is when you're looking for price to, let's say price is down in the dirt. You know, they've been selling off all morning, but then they found a support and they're just kind of trading. What you're looking for is for one low, a decent pop. You want to see price add some strength to that pop. If not, you need to wait for a better base with multiple lows. And then you're going to look for price to not just make a double bottom, but sometimes you'll end up looking for a higher low as well. And then you want to look to buy this move, the move that comes after that first pop that has rising volume above the resistance that first move had problems with. And again, I have an entire playlist on all this, so don't sit here and ask questions like this is the first time I've explained this. But I would 100% check out the BB system playlist, the day trading playlist, the buy the dip strategy playlist. I have info on every single one of these quizzes, breakdowns in the Discord. Again, if you want better, more in-depth breakdowns, check out the videos or some of these stuff in YouTube. But I'm not going to sit here and talk about risk reward for the rest of the stream. But since you asked that question, I wanted to get it out of the way. And yeah, the retest is tough to wait for, but that's where you get your better probability. You got to be patient. So everybody understands those levels. Let's jump down to the Qs. Mouthful. And I'm sorry I was jetting through that so quick. It's just that's not the intended, you know, focus on today's stream. But since you asked, I wanted to throw you that. So let's start from top before COVID fall. Actually, this is after COVID. So we got our high there. Price is way up there at 282. Let's start adding our emerging candles. Whoops. Sometimes it doesn't snap on where you want it. And thank you guys for being so patient and letting me break this stuff down to give you kind of a better idea of what my thought process is and all this. You know, some stuff is a little bit weird to kind of hear at first. I understand that emerging candles are weird. You've probably never seen anybody say emerging candle and break down the left side of the chart. Again, my entire focus is price history. I love price history. Price history is one of the most reliable and consistent indicators in the market, and not a lot of people use it. I would say generally just computers recognize it because it's kind of hard for a person to remember, oh, on this date price did this. This is what it can do here. You know, it's hard to know that. We're not computers. See, no new high, so we don't mark that 267, which probably could just because it does line up perfectly with it, so it probably wouldn't hurt much. At that level, emerging candle. Whoops, didn't click correctly. Emerging candle, emerging candle, emerging candle, emerging candle. And I'm trying to do the halfway points before I go too far right because then I'm going to have to go backwards and then I'll be all lost. Which, actually, that's not a bad range. That's fine. Now, 271 to almost 275. Could add a level in between there. Let's just do it. Why not? That didn't hurt us. And now we're all the way. Oh, and now we're all the way up here at the 300s, basically. So pretty cool. At our halfway point, that's a bit too far of a range. At our halfway point here, bit too far of a range. So it looks like we got a pretty good amount of levels. If we wanted to keep going, we could, but it looks like we're good. Let's go look at what it looks like on the smaller time frames now. And you can see we've got a lot of pretty good effective price. Now, last week is a really good example, and that's why earlier I said be sure to jump out to like the 20 or 30 days to go check out more than just the past week, because we've had a lot of catalytic type days. So you're going to have a lot of weird price action. But you can see even on weird catalyst days, just like on SPY when I just showed y'all, even the Qs found its way on a support after a crazy pump after news. Even though we had a lot of range trade days, they stuck to the levels. And then adding, and this is what I'm going to show you next, adding, and this is what I'll have tomorrow, adding the previous day high. So let's just say the wick to the meat of it, about right there. Whoops. The meat of it, the meat of the high. It's about in that general area. So let's say price, started moving up in after hours or pre-market. We would have to look towards this area for a push. You'd have to look towards this area to break and hold over for it to continue higher, and vice versa. We're going to add our previous day open, our previous day, oops, I added that wrong. Previous day open, previous day close, and this gives us extra levels of short-term price history to add on to what we've already added. I am fairly new myself. I joined him about a little over a month. I was completely lost because he talks pretty fast too, but I stuck with him and did his course, and he is my hero now. Appreciate that, Sonia. You're my hero. I notice you sometimes change your pre-market breakout levels to some of your daily levels that you mark. I don't change any of my levels. How close would the pre-market level have to be to one of your daily levels for it to be your breakout? Okay, I see. So I'm changing my breakout now. I'm not changing my pre-market breakout levels. It's the outside one. So let's say my pre-market... Let me go back to a day that's already had a pre-market. Just like right here. I'll go back to this day. So adjusting to the levels from this day, because I haven't added anything yet, I would have to add my previous day high, which let me just add the meat so we have less levels here. Meat of the previous day high. Meat of the previous day low is about right here. Previous day close. Previous day open. Pre-market high is about right here. Pre-market low is, where am I at? Where's 0? 0, about right here. So that instantly answers your question. But my pre-market low is right here, right? Why would I short there if I have a clear of day previous day level there, right? So it's really this whole level. Hold up. Why does it keep doing that? It's this whole area that I would need to look for a break below. I don't need to just break pre-market low or I need to break all of them, okay, for a better short-term play to the downside. I need to see that break, retest, continue lower, and then that would be my indication to move lower, right? Let me delete this. I'm getting better with my hotkeys. And then vice versa. Let's say I had a break above level, right? Yes, previous day high would be a great level to break above, but I have the pre-market high there, so that needs to be my break above because it's just outside of that. So I can look for holds of this support for a continuation higher, or I can look for a break above the pre-market high. Now, and this is where a lot of people get misconstrued, nothing always works. So just because you got in on a rising volume entry above a level for a 40% entry, that doesn't mean it has to go to the moon. And same thing for an 80% entry. You are going to accept losses. Get that through your head. You're not going to just win. You are going to experience losses. The point of this is to figure out the risk of reward. You're not going to jump into a trade, right, just because there's a fat red candle. You need to point out, why do you like it? Okay, well, I like that it broke the pre-market low. It's outside of the previous day levels. It has rising volume, and there's a good target right outside of this. That would be your good risk reward for a scalp entry, right? You need to be able to plan this. It's not just find a good level, find a good entry. You have to be able to plan out everything around your levels. But again, this is what we cover every single day during the stream. So be sure to tune in. Be sure to check those out. They are all public. So give yourself time to look through them. But let me go back here and delete some of these so I don't mess myself up tomorrow. I like to add them on stream so people see me add them so they're all on the same page as me. Delete that one. Alright, so what are we on? So we did SPY, bigger to smaller time frame. We did the Qs. Now it's time to jump into actual tickers now, finally. And you guys can see it's been almost 45 minutes, and all I've talked about is the dollar, SPY, and the Qs. That's all we've literally talked about. We got to break down a little bit of the entries we like, limiting yourself to them. Again, you should find types of entries that you like. If you want to use my system of finding the 40%, 80%, or the buy the dip entries and limiting yourself to them, please do. Give yourself time of reviewing the levels, visualizing. If you want really good breakdowns from my group on how they look at the levels, go to the trade results tab. I have hundreds of members in here who post in-depth entry exit plans with their entire thought process. And this isn't through their own thinking. This is how we have formed people to think. using the levels, thinking more methodically, not thinking, oh, this is what I hope it does, this is what I want it to do. No, none of that crap. Methodically, conditionally. Oh, if it does this, it can do this. If it does this, it can do that. This is what we're trying to push. Factual ways of trading, not, reasonable ways of finding things, not just randomly guessing or hoping for trades to work out. We don't do that here. So let's jump out to Apple here. I'm going to go through Apple, Microsoft, Amazon, Tesla, Meta, Google, AMD, Nvidia, Netflix, and Square. And then we'll be done with the stream. But at the end of the stream, all of you guys will have the exact same levels as me. You'll see how I'm doing it. Even though we have videos and playlists, I do understand it is kind of nice to get a refresher on all this stuff. So I'm really happy to be here and do this with all of you. But please make sure you're taking notes or writing something down or remembering some of this or going back and reviewing some of these streams. Because I don't want you guys to have to ask repeat questions. And I don't really mean in the sense of like, oh, I'm going to be annoyed by repeat questions. I just don't want to see you stuck in the same spot, especially at this stage. Right now, what you need to be doing is visualizing, mental trading as much as you possibly can, really growing that mental bank that you have, the intrinsic value of yourself. Find these levels, get really good at them. Go back onto the smaller time frames or bigger time frames, whatever you're into, swing or day trading, and limit yourself to those types of entries. Circle where would be a good entry, where would be a good stop loss, and try to make it to that first target. Get really good at mental trading to the first target, and then as time goes on, you can add more contracts into your mental trades, take them from your first target to scaling out at your first target, getting to the next target with runners. Again, selling most of them at the first target and having maybe one or two to the rest of your position. And then you can take it as far as you want. But let's keep going, guys. And yeah, let me grab a sip of water. Good idea. It's just a lot of information that I have repeated probably thousands of times, so it just feels like I'm on a script at this point. But let's jump into this, though. So I don't really need to start this low. I did kind of start a tad low for SPY and Qs, but I was just trying to do it for you guys so you guys can get a really good example of what I like to go grab, what I like to add, why I mark it, why I like it. And I can see we're about 142. My cursor's way over here, so we could probably start in this general area, get a couple levels below, a couple levels above in this area, and then we should be good for it. So let's start back here. I'm going to just start here. 114. Add that high, add that high, add that high, add that high, add that high. We got a couple wide ranges here. We got a few of them, so we got to add a control point, a halfway point. A fancy way of saying halfway. And the reason it's so effective, these halfway points, that it might feel random, like you're just adding some random level there, but the reason it's so effective is because you are utilizing other important info. I'm not just going from here to some random level. I'm going from one emerging candle to the next to give myself what is the halfway point of that. Even algos pick up on this. So that's why it's important. And that's a decent dollar range. We don't have to adjust that. Let's fix this one, though. Delete that. Go from here to here. Add that. And see how easy it is? It's really not that hard. I would say the charting part is probably the easiest. It's really good practice, so you can get faster at it. And then over time, jumping down to the smaller time frames to give yourself that smaller time frame trading review to really visualize what's possible down here. Come on. No emergent candles there, so nothing to really add. Add a halfway point. Zoom out. Just kind of look at it for a second, make sure, okay, this isn't that big of a range, or all right, I grabbed enough below, I grabbed enough above. I don't need to keep adding. Looks like we got a pretty good amount of range on both sides. Jump down to that smaller time frame. And this will be where we get our levels for tomorrow. I'll probably highlight the previous day highs, again, grabbing the wick and the meat. If you just want to grab the meat of the bone, be my guest. That is the more preferred method of just grabbing one level. But I do have a lot of people always asking me, what's better to add, just the wick or just the meat? And if you have to ask, just add both. That's pretty much how I go at it. So, and you'll see me highlight this. Everyone's always like, what are these zones that you're drawing? They're not zones. I'm just showing you, I'm just highlighting areas so you can see it a little easier. So tomorrow we'll be probably focused on the previous day lows and the previous day highs, really depending on how we kind of open up. And you can see the previous day close is very close to this 142, so there's almost no need to add that level. But if we really want to, we can highlight that as well, just kind of a small pivot point in between the previous day high and previous day low. And then, of course, we have our previous day open. So actually, we have kind of an entire vicinity of levels that are going to be a good in-between pivot point. So regardless of what tomorrow's pre-market high, pre-market low is, we open higher, I'm walking above this, or for rejections here, if we open lower, you know, then we have stuff to go off of. It isn't the end of the world if it opens lower. There's other levels here. So that's probably what I'll be focused on going into tomorrow on Apple. So if we start, let's say like right here, I'll probably say above 142.50s, look for longs, and then we'll target 143, 144, so on and so on. If we're in here and I'm looking to the downside, I'm going to say watch for a break of under the previous day lows, which let me go ahead and add these levels here so you can see it. The meat of it, or the wick of it, sorry, and then the meat of it. So it looks like under 140.90s, we can look for shorts. Above 142.50s, we can look for longs. Again, using the levels as a combination to help give you good trading plans for not just upside or downside, but both, giving you really, really good non-biased trade planning. But let's go on to the next one. Microsoft, queen of the market. All right, we're on the right chart. I just had to triple check. So we're at about 245. So I could probably start about right here. It also gets that support. And then I guess I could go all the way past this little hilltop here. Yeah, so I go from hilltop to hilltop. We'll start back here. We'll just start down here. And Microsoft's one of those ones that has a lot of levels. I try not to add as many as I can because Microsoft has a ton of price history. They've been around for a long time. So they end up having a lot of levels mash up into each other. But it still has very clear trade plans on the smaller time frames. You can see how there's like 3 levels in one spot, and then there's no levels for a while, then there's 2 more, then no space, then 3 more. It has a lot of levels in certain areas. It's almost like I'm charting supply and demand. Emerging candle, emerging candle. I'm still just adding emerging candles. I have yet to add a halfway point. It looks like we're pretty fairly above price. I just wanted to make sure I had as many levels as I could. And you can see it's very messy in that 260s, 250s range. A lot of levels there. Jump down to the 5-minute, and you can see there's a lot of fluctuation down here. Even though we dipped a little bit lower, we never broke that pre-market low. Ended up holding a low there, a higher low, building up, and never really could get past anything. And you can see I could probably add a halfway point in between here. So let's go fix that up a little bit. 3-year daily. Emerging candle to emerging candle. Again, anytime you have a large range, be sure to add that halfway point to fix that wide range, basically. And this will help us out on the smaller time frames as we adjust across the week. Of course, we'll add our previous day high, previous day low, all those smaller time frame levels. And we call that the BB system. And I'm not here to say I'm the first person to ever trade pre-market, but I am definitely one of the biggest advocates of pre-market info. Using the previous day open, close, the current day open. These are very strong pivot points. Think of like a kitchen door at a restaurant. It opens one way as people go in to make the food. It opens back out one way and they come out to deliver the food or whatever they got to do. And that's what these levels are. They're like those doors. They swing in one way, they swing out the other. It's just who has the volume and momentum to push through it and not just break it, but retest it. And then that gives you more high probability signals. Looks like I have another wide range right here. Clear that. And this makes super easy trade plans for us tomorrow. So, and kind of like Apple, which most stocks will look the same because of what we have. Again, guys, this is all just the levels and stuff. You do still have to worry about the FOMC and the interest rates and CPI coming out Tuesday. And then we have all that FOMC stuff on Wednesday. So like I said last week, we probably weren't going to get much trading, big movements happening. In the last 3 days of last week, we just sat in a tiny range. So that was good high probability just using the levels, knowing that the market's probably trading in anticipation of the news the following week, which is this week coming up. So definitely still have to worry about that. So I wouldn't really look out to trade super heavy tomorrow. But it looks like here on Microsoft, again, back on topic, we'll be watching the previous day lows. We have our previous day close to look out for, which kind of lines up with what we talked about on Apple. We had those lows and they had those previous day close and opens all in the same area. And then we have our previous day high way up here. So pretty decent trade plan if we can get back above 245.50s, which I think Apple we said 142.50s. So it's kind of cool how that lines up a little bit. For decent movement to the upside, could possibly look for this little support here where price kind of sat on for a while on Friday and then decided to dump. So we'll probably look towards that over the 245.50s, sorry, for about a dollar movement, and 247 is kind of a secondary target to look for. And if we end up cracking that, we can look for farther levels, of course. But as you can see, the levels are lining up to give us a combination of levels to give us that higher probability trade plan. Again, you're not using levels that don't work. These levels 100% work, right? you're just not going to always win every single time you take a trade past a level or towards a certain level. And that's why it's so important to understand what a stop loss is. Again, you shouldn't, I personally don't set them. I just kind of watch for them. Again, I'm not going to set a stop loss because then you have those long wicks that come down, it cuts me out, and then it wicks back up. And I could have still been in the trade, but it cut me out. So that's the only reason I don't like to set a stop loss. I just like to have one in my head or have it written down somewhere or in my notes somewhere on the screen where I can say, all right, well, if this comes down past this with good strength or good weakness even, then I'm going to get out of this trade. I'm not going to just take a fat loss. I'm going to cut it here while I can before it really hurts me. And this is how you should view your risk reward when looking through these levels. But get really good at drawing these levels, visualizing between them using the volume, the candlesticks. This alone will help you so much. But let's start with the Amazon. Sorry, I'm like rambling again. I just want to make sure we're all on the same page. It's not like this is the most complex thing. I think a lot of you guys are really smart, really intuitive. I think a lot of you guys can take this market. It's just this system, if you're new to it, you know, it does take a little bit of like, oh, okay, you know, a little bit of understanding, analyzing, reviewing to really kind of nail down the hatches and understand, okay, this is why they like this or this is why we look for this, you know. It's really not that complex. Let's grab some emerging candles from down here. I see we're at like 90, so I start a little bit lower. Pretty good range between here and here. So let's add that. Remove drawing. 79 to 80 is not bad. We'll leave that. All these look good. Let's keep moving to the right. I'm kind of doing these ugly zooms for you guys because I just really want you to see it. I skipped one, but it still worked out. Emerging candle, emerging candle, emerging candle, emerging candle, junk, 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 junk. Let's see, what other levels do we need to add? This is actually not that bad of a range, it just looks worse because I have it so zoomed in. So this actually look pretty decent. Let's keep going to the right. Okay, I'm going slow just so you guys see that I'm not skipping over anything. I'm trying my best to kind of stay on task. Got a pretty large range between these. Might even have to add another one. Whoops, didn't even add that. Add, remove. That actually looks great now. Keep going. Emerging candle, another emerging candle. EC. EC, EC. And I think I'll stop pretty soon because we're pretty decently above price. And we're almost at 100 a share. So we'll leave it there. If we really wanted to, we could continue higher and add more CPs, all that good stuff. Jump down to the smaller time frame to just kind of remind yourself. I like to do this because it feels like you finish the process by doing the bigger time frame first, and then you jump down to the smaller time frame. It's like, okay, this is what's left. But let's zoom in. So like I said on Apple and Microsoft, you can see that this previous day low is lining up with a pretty bigger time frame level. So we're going to have to focus on yesterday's open to yesterday's lows while also combining that bigger time frame level. So we're going to have to watch this general area for a drop to the downside. So if we want to see any movement to the downside, they have to break this area, retest it, do whatever they need to, and all that good stuff. And let's also add our previous day close, which is the bottom of that red candle, the meat of it. Meat of the previous day high, and it looks like we have an easy break above level as well. We can look above 90, or we can look outside of 88.50s basically, which again, this kind of adds into the other part of it, the psychological factors. Anytime you guys have any weird numbered levels and you hear me say a different number, it's not that your level is wrong, I'm just adding a psychological part to it. So I would never say 88.67. I think that's kind of stupid to say, guys, make sure you get in as soon as 88.67 breaks. No. You need to probably watch for 88.65, 88.60, the more flat part of those numbers. That is a general, huge, important, crucial factor in any support or resistance, the psychological number. Mad late, but had to pull up. No problem, Mies. I'm just glad to have you. You've already heard this stuff a million times, but be sure to go back to the beginning of the stream if you really want to catch everything. So far, you've only missed us covering the dollar, SPY, and the Qs on the bigger time frame. I covered these two on the smaller time frame, and now we've gone through these three, and I'm on Amazon, just kind of covering the smaller part of it now. We've already done the bigger time frame levels. But that's all you missed so far, and you still have a pretty good amount of this. So in all, I'll be going through 15 charts from bigger to smaller time frame. But that's our general game plan without even having to wait for tomorrow to open. You can already have a generalized game plan. Now, yes, if pre-market opens way higher or way lower, that is going to affect us. But for now, this is what we have for a game plan. Of course, that will adjust in the morning like we do in the pre-market stream. So make sure to be here for the pre-market prep, and you guys will see these exact same levels pop up again. All right. I need a sip of water again. All right, so Tesla. Now, this is one that gives a lot of people kind of a bit of a doozy because there's so many levels that you have to add that aren't emerging candles. There's a lot of levels here that are control points of control points, if that makes sense. I'm halving up the half up levels just because there's such a crazy rally from Tesla over this, few month span. So I see prices about 179s, 178s. So I probably need to start a little bit after this peak. We probably need to finish somewhere above this recent rally. So probably in between here and here, we need to get all these levels. So let's zoom in and let's get them going. So I think I'll start here. You see how I didn't grab this one? Because it's not an emerging candle. I've pushed up this high and sold off. We didn't push a new high with this green candle, so we don't add that candle. You can see we already need to add halfway points. Between 109 and 122, it looks like Tesla has a control point of about 116. So we'll add that. There's another range here. Because again, it wouldn't be fair to sit here and say... Okay, I'm completely screwing everything I just did. There we go. It wouldn't really be fair to say above 122, guys, let's target 133. No, there's definitely going to be a level in between. Yes, that can be a good, outside further target, but the majority of this needs to be the control point, right? So let's add that halfway point because there is definitely going to be a level in between there. And you'll start to notice a lot of the times, and there's a couple variations of it, and this is why I do this because it's more consistent, but a lot of the times you'll notice variations where you have a red candle or a green candle go up and reject, and that also ends up being where the halfway point is, or where we have a rally and then a reset candle, kind of like this one, and the halfway point ends up being where this is supported at, and then that ends up being a solid level. Don't go off of these candles. Use those control points how I'm showing you because that will always give you a consistent level in between that range. Whereas adding these variations, you'll have a little bit of skewed TA. It won't be off horribly, so it's not the end of the world if you do that, but you'll start to see a little bit of difference between those. So that's the only reason I add onto it. You can see it here, actually. From here to here, this ended up holding the halfway point and the golden algo, and ends up picking back up the next day over the recent day highs. That would have been a very solid day trade plan to the upside. You can see we have a very big range between here. What's up, Mike? How you doing, man? Hope you had a decent weekend so far. EC, EC, EC. Let me just type that. EC. There you go. So I can say it as many times as I want now. Oh. We got a big range between these levels, between here and here. Add the halfway point. Halfway point, emerging candle, emerging candle, emerging candle. Pretty large range there. $7 isn't really the end of the world for a stock like Tesla because that is something that can move that much in a day. But it's still nice to kind of tack down those in-between levels. And you can see we're pretty far below and or above and below price, so we don't really have to keep going. It looks like I have a couple large ranges in here I need to fix, though. Let's go back and see what I did wrong. Oh, it's right here. I'm blind. Let me zoom here. Yeah, 173 to 185. That is a huge range. Come on, Josh. What are you doing? To halfway point. This halfway point to the emerging candle. That did not set correctly. Again, from that fib to that emerging candle. There we go. That worked right. At that halfway point. It gets a little tedious on some of these charts. Some of these you'll find it very easy. Some of this you're like, damn, I wish I just drew all of these already. Looks like there's a couple more we could grab, but that's good enough for now. Get out of the 5 minute. Zoom in. And now we can start kind of setting up our day trade plan for tomorrow. So we know that above the previous day highs, kind of between here, we can look for a good push to the upside. Previous day closes right here, so we have another kind of pivot point between a historical level and the previous day close, where we can look for another move to the upside or rejections against, and then vice versa. We have our previous day open here, previous day lows, so we can watch this general area. Oops. We can watch this general area for more moves to the downside, or for a bounce play possibly. So let's say pre-market set up like right here, just sat to the right, and pre-market's here. What's our game plan? Well, we're going to watch under the pre-market low towards the previous day low / open, or we can look above 179.50s into the previous day highs. So it already kind of gives us a game plan, excuse me. Also, and I don't do this a whole lot, if you see days like this that have good levels of TA, you can see clearly the pre-market high is right there, and this is where price kind of consolidated. That's probably going to be a very important level going into tomorrow morning, so I'm going to most likely leave that there. But as you can see, that gives us a very good game plan going into tomorrow without even tomorrow opening. It doesn't matter if tomorrow's bullish, doesn't matter if tomorrow's bearish. We're going to have really good trade plans for both sides of the story. No, I misspoke, Big Stick. I said algo because I say algos like to buy at that spot, but it's the golden ratio. I wouldn't pay attention to algos too much. It's something that you're not going to be able to compute in your head, and two, you're not going to be able to trade off of that info. Again, algos are made for a reason. So I would more or less focus on what you can control, and then you can go and work on that. Bueller doing a service for the community, sharing the knowledge, doing great, boss. Thank you, man. I appreciate that. Had a little shindig this weekend. I hope you had fun. Andrew, yeah, I mean, it might be worth it. $3 to $5, that's a decent sized range. Like I said, I don't really have a set dollar range on this. I kind of just go off of what I see. I know that SPY has a very hard time of moving $5 at a time on the intraday time frames. So yeah, you probably could add a halfway point in between there. I don't see why not. The no trading zone. Now, the no trading zone is something that's kind of situational, Tulip. It's not going to happen on every single chart. Let me see if I can find one. Like here on Apple, would it be smart to trade in between here? Knowing that this less than $1 range, should you trade in between here? No, logically thinking, this is a no trade range. So it's not really something you see on every single chart every single day. It's kind of situational. In this scenario, I would say this is the no trade range for Apple. You shouldn't just buy calls randomly off support. You shouldn't just short the resistance. You should wait until this range breaks. Now, if this is a bit of a larger range like between here, that's a different story. But sitting in such a tight range, this does kind of set up an initial, like you said, no trade range. And like I said, this isn't every single chart, every single explanation. You're not going to see it every single day. But anytime you see a tight range between, let's say, your previous day open and your today's open, or previous day open, previous day close, a very tight range, and price is in there before breaking out again the next day, that needs to be your no trade range, because you shouldn't take trades because you don't have confirmation that something wants to move further. You have zero indication that something wants to increase or decrease off of your levels. So it's kind of situational, and that's why I try my best to explain that when I draw them. You'll never see me throw levels up and never explain it. Every single damn time I explain why I'm doing it, what to look out for both sides. I will never sit here during the week during, posting my trade ideas and say, all right, guys, puts look good here. And that's it. You'll never hear me just say that. You'll always hear me say, all right, guys, shorts are starting to look good here if this can happen. And if it does happen, you can leave a stop here, look to target towards here, and vice versa. I always cover everything I possibly can because I don't want someone to sit there and go, oh, you said above 48, man. Well, I bought and it didn't go anywhere. Yeah, but I don't just say 48. I'll also show you what's a good stop loss if you do happen to like this play above a certain level, and vice versa, giving you the full details of everything of around that level or whatever scenario we're looking at. So we got Tesla. Let's jump to Meta. Now this one I think I do have to grab levels from a pretty long time ago. Yeah. So I see we're about 115.90, so I'm gonna have to do a couple levels from here and a little bit above. And look at this. On some charts, I'm charting from 2020, 2021, 2019. On this chart, I'm in 2015 to 2016 to 2017. This chart has years ago of information on it. And thank you guys for everybody who's asking questions, and to the other guys like my moderators who are answering to some of these messages. Well, I'm trying to get through the main focus of the stream, which is, again, just grabbing the levels. I really do believe finding good levels is hard to come by, especially when you're looking at other traders' content. It's kind of a plethora of knowledge when you jump onto trading at first, because you're like, all right, what direction do I go? What do I think works for me best? And at first you'll never know. You're never going to sit there and go, oh, this is what I need to do. So I don't expect people to find our channel instantly, to think, oh, this is the one single source of succeeding. No, there's a billion ways to succeed in trading. It's just this is what we like to focus on. Levels of support and resistance that make sense to us, and through a routine that's consistent. You're never going to see me draw levels, delete them, and then when I redraw them, I get different levels. They're always going to be the same, unless I messed up, of course. But it's always going to be consistent, and that is the biggest thing. The biggest variable that a lot of new traders don't have is a consistent routine. And this is what stops a lot of people. They jump indicators, they jump strategies, they jump chats. You know, you end up switching up everything you're doing, and you never give yourself stability. You never give yourself stable ground to build off of. Would adding open range break from 30-minute as another level work as well, or no? Yes, you totally could, Yo, it's Gerald. That's actually something I used to include in a lot of my old courses. I just don't like to confuse people, so I don't go over it anymore. But yes, Gerald, you could. That's a very good question right there. So let's jump into doing meta real quick. Let me get a sip of this tea. But Gerald, that is kind of preference. And like D-Touch just said, he likes to use the 15-minute. It really is just kind of preference. But be consistent. Don't look at it one day and then switch it to the 20-minute the next or the 30-minute the next. Stick to a consistent one, so therefore you can start to kind of build up a relationship with the style or routine that you're going through, or your methods that you're going through. Therefore, it's consistent. Remember, consistency is key no matter what we're talking about. Okay. Well, perfect question then. All right, so what was that? Meta. We still got Google, AMD, NVIDIA, Netflix, Square after this. And then maybe we could take some questions at the end. We'll see how I feel. But 115.90s, we got to start with Meta. So let's start maybe down here at like 100. Again, I'm grabbing a level from, what day is this? October 19th, 2015. I'm grabbing a level from 7 years ago. So again, just goes to show you how strong these levels of price history are. Whoops. Oops, I'm just misclicking all over the place right now. I'm nervous. You guys are making me nervous. Alright, so we'll add this level here at 104.88 to 109. Add the halfway point. Remove drawing. And continue onwards. Got that, got that. Fill up that halfway point. Sorry, I got like kind of quiet there for a second. I apologize. Going from that halfway point to that emerging candle at that halfway point. It's really just filling into spaces. It's really all we're doing. It's nothing big brain or anything some genius had to invent. It's just price history. And that's kind of my favorite part about this system. It's very simplistic. Again, it doesn't take, I always preach this, but it doesn't take a smart person to be good at trading. It doesn't even take, a lucky person to be good at trading. It takes a disciplined person to succeed in trading. Jump down to the smaller time frames, and you can see a lot of our levels end up working out on a lot of these different days. Again, like I said, don't just look at the past 5 days. This is kind of a bad example because a lot of our past few days have been pretty boring, or you could say, especially after we had our pullback, we've kind of been sitting against major trend lines, or in other cases, major supports, and just kind of waiting in anticipation of this upcoming week's news. So, of course, it's not going to be perfect looking these past couple days, but overall. So, let's add our previous day high, which you can see we have a level about here, and this kind of adds on to whoever asked that question earlier. We could look past this entire area for a rejection or for a pushover and a hold on top, so that we could look over that tomorrow. And then going from our previous day, you had our open here down to our low, probably be looking at a combination of this area for a drop to the downside at our previous day close. And we have a good in-between pivot point between that historical level and our previous day close, which I don't know why that drew. There it goes. So we can look for really good moves off of these. Again, study a little bit more of these levels and then jump into the types of entries. Don't just think like, all right, I get it, I'll jump ahead. You know, don't jump ahead of me. Take your time. The market's not going anywhere. You're not going to miss out on any possibilities of good plays. You know, you might miss some plays, but there's always more in the future. So don't trip. Trust me. Take your time. Like I said, build some stable ground under you through consistency, through routine. Through these methods, you will grow slowly over time. Just give yourself a chance. And like I said, check out workshop number 11. Be sure to read this notepad here too. I typed this out for you guys. But this is the one-stop shop video. I'm not joking. Like I put my heart and effort into that video for a reason. Let's jump into Google now. Let's get this chart done. Which I haven't been charting Google as much lately, so I'm really happy to get this chart completed finally. So start here. And you see what I mean here when I was saying there's multiple variations of like the halfway point. Whenever you see it used with the candlesticks, price kind of popped up here and then held it for multiple days. Don't just add the support. That'll be inconsistent because that won't always look like that. Sometimes you'll have it reverse further and then you'll have a lower level of support to grab. So don't do that. Make sure you're doing the halfway points as clear cut as you can. You shouldn't be looking to grab supports of red candles just because they're reset candles. But that is essentially what we're looking at. A lot of the time you'll see those line up. Like right here, these don't line up at all. At that level, at that level. Let me zoom this out a little bit so you guys can see a little better. You don't always need to do this. Remove. So we got that level. That's pretty close to a level. I'll just go ahead and add it. And then add this one. And then, of course, we have this huge jump from that huge news we had back then. This is way before their split. Yeah, because we're in 2020. We'll go from here to here since we have a large range. And we'll add our halfway point. Bam. Got it. Now, this right here is what gets people sometimes. This is what I thought was going to be a doozy on Tesla, but it really wasn't that bad. Is when you have large moves like this on the far left that haven't ever done this. A big thing to do is not just go from here to here and add your initial halfway point, but you're going to essentially grab a halfway point in between this level to this level and this level to this level to give you those extra levels. Because, again, those are still too bit of a large range, you could say. It's just not fair to leave them as is. So be sure to add those halfway points again from the initial halfway point. I know that sounds kind of weird with how I'm saying it. I'm trying to make that make sense, but that's as far down as I can break that down. So I'm sorry if that's a little confusing, but trust me, over time of adding these, it'll start to kind of click for you more. Again, it's just like anything else in life. You can't expect to look at it once and think like, oh, okay, well, I'm a pro. I can do this now. This is easy. Trust me, take time to practice. When I was in plumbing, something I did regardless of what time I got off, because I never had a consistent schedule of getting off work. I would get off work sometimes at 4 or 5, and then there'd be days where I didn't get off till 10 to midnight, sometimes even later than that, depending on what we were doing and where we were doing it at. Commercial or residential, it didn't matter. We were always out late, so it kind of messed with me on my charting when I initially was just trying to get into trading. But I would always, no matter what time, go through at least 5 to 10 charts using this exact system, just to kind of give myself a good method of something that's consistent. Because like I said before, you want to have stable ground, and just logically speaking, it makes sense to have a consistent routine so you can grow from it. If you have variables moving around at all times, like we do in our options contracts, you're never going to have a stable spot to learn from, because you're always going to be going from a different spot or doing something different, and it's never going to sit with you well. So make sure you are trying to kind of keep things consistent. Like I said, cut out as much noise as you can as well. You shouldn't be sitting in this stream and you tell me that you're in 5 discords. You shouldn't be in 5 discords. That's just crazy. And same thing with traders. Everyone always asks me, who's my mentor? What traders do I follow? I only follow a handful of traders, and I don't have a mentor. I never had. You shouldn't focus on having, 50 different ways of learning something. Try to just focus on one. Get really good at it, tack it down, move on to the next, and continue forward. You shouldn't be accepting large amounts of noise throwing you off or changing variables in your routine. Therefore, it's just throwing you off. Again, the biggest problem with new traders and any trader in general is that they don't find a routine or something that's consistent to hold them in place, to keep them stable. They lose one trade, they're back to going, oh, I need to restart my account. I just blew it all. I don't know what to do. They feel like they went back to square one. If you have a stable ground, a stable routine, you will never be going back to square one. You'll always be going back to square two, square three, whatever is past that in your journey. But it's to help you out. So take your time. He's talking about me again. And trust me, I'm not attacking you. I don't mean to sound like that, but overall, I had that problem a lot too. I was always trying to find the next indicator. What was the next thing that I could consistently follow? And nothing ever worked for me that worked well, and I felt comfortable with it. So even if I made money, it didn't really make sense to me, then I wouldn't like it. If I didn't know how I made that money, I didn't really like it. Just because it won doesn't mean it's a good strategy to follow. I need to be able to understand it. And that's what these levels teach. So going in, and I'm sorry for rambling, guys. I'm just trying to give you kind of a consistent thing to follow. It really does kind of get to me when people are still saying to me, like, how can I grow from this? And they think that they're going to get results within 1 week, within 1 month, within 1 year. You're not always going to get these results that fast. It's going to take time. I've only been in the market for just over 5 years, only in options for about 3. That's not shit. Some people might be like, damn, that's a lot of time in the market. What a pro. There is no such thing as a pro in the options market. There is no such thing as a long-standing pro. Nobody ever goes that long trading options successfully. And it's because I don't have a consistent routine. You always hear that stat, 95% of people won't make it, 5% will. That's such bullshit. And you know why? It's because there's no consistency to that. How do you know that 95% of people won't make it? It's not because of current market conditions. It's not because of Jim Cramer giving them bad trade signals. It's because of themselves. They don't have a consistent routine to follow, and that's something that's not really taught a lot. So let's raise that 5%. Let's show people what consistency can truly be. It doesn't have to be making $1 million a day. You don't need to be making 50% every time you take a trade. You should be aiming for smaller percentages. You should be using less of your account to take these trades, risking less, growing. But let's continue, though. I know I'm continuing to ramble. So let's add our previous day close. And you guys will see me do this in the morning as well. I'm just kind of giving you a brief description so you guys know I'm not just leaving it as is. But as you can see, though, we'll definitely be looking under 92.50s possibly for a continuation down on Amazon, on Google tomorrow. And if we get a pop over the previous day close and a hold on top, this will be really good movement for buyers towards 94. So there's a couple trade plans we can look at here on Google tomorrow. Let's jump into Google or AMD now. That halfway point, auto zoom back out. Look how far back I am. I'm in 2020. It's really not that far compared to like Meta when we were looking at, like 6-7 years ago. Damn, Bueller, out of all the languages you chose to speak facts. I appreciate that. I just want people to know it doesn't take a smart person to win. It doesn't take a genius, someone that's intelligent, high IQ. Like, that's all bullshit. It just takes someone who's disciplined, and the majority of human beings, not just in trading, but in general, are emotional. A lot of us like to, once we get into that trade, we have an emotional connection to that trade. We have money on the line, so it throws us off a little bit. Without having those consistent routines, you're always going to get knocked back down too many pegs to where it feels like you're losing control. And that's because you don't have that consistent routine. So trust me, it's something that's very nice. I never had a mentor. I would say my first mentor would be stability. My mentor would be finding a consistent routine. Your routine should be your mentor, not some random dude on Twitter who told you he made $20,000 trading SPX or Tesla or AMC, whatever they trade. That shouldn't be why you want to follow somebody. You should want to follow somebody like yourself or your routine. Follow your routine. That should be your mentor. Okay, here's another doozy, guys. So we have a halfway point, but we still have a wide range between an emerging and a halfway point. So we're going to have to be a little OCD with how we draw our levels. From halfway point to emerging candle. Bam, we got it. That wasn't too bad. This is also very crucial because current price is right here, so we don't want to mess that up. And there we go. We got to get another one in here. Whoops, messed that up. Emerging candle to emerging candle. Add the halfway point. All right, so we got a pretty good amount of levels above and below. We don't have to keep going. It is nice to kind of keep going just to kind of do it for practice. Give yourself the eye for it. In plumbing, whenever you're really good at figuring out when a pipe is straight without having to use a level, they call that having the eye for it. It's kind of the same thing for these levels. You kind of have to develop the eye for it, the eagle eye. Let's jump over the smaller time frames and then easily look at this. So tomorrow, we'll be paying attention between the previous day low, previous day close. That'll be a good kind of short-term area to look at. But of course, pay attention to the pre-market info. But we have previous day open. We already got the previous day low and close. And then we got kind of the meat of the bone and the wick of the highs. So we have kind of a general area of previous day highs. Oops, let's fix that. Sometimes it clicks somewhere else and it makes you draw a completely different line. But right there, we already kind of have a decent general plan for AMD going into tomorrow. We have 6750s, and of course, according to pre-market, we'll pay attention to that as well. If we're just kind of sitting in here, like let's say for this example, we'll be looking out of 6750s and 6850s. If we start inside of here, we'll be looking outside of 6850s and 6950s. If we're in here, you know, it just keeps going because you have a consistent, you know, group of levels. Engineers and doctors are some of the worst traders. Yeah, I don't know how true that is. I do know that most females, at least females in certain sectors, and then Marines, those are some of the greatest traders that I've personally met, at least. A lot of them make better conscious decisions, don't emotionally trade as much. They kind of stick to what they plan. And a lot of us will have different roads. You know, let's say Taylor. Taylor has a bumpy road where it takes her 3 months of, you know, making mistakes to finally stick to her rules and grow that discipline a little better, trusting her discipline and routine more. And then you'll have, let's say, Mike. It takes him 4 months. You know, and let's say me. It takes me 6 months. Let's say Chris Kaufman takes him 2 months. You know, it's going to be a different bumpy road for everybody until they go through it enough. But over time is the goal. You want to, over time, look at this stuff enough that you grow not just the eye for it, but the consistent routine of being able to grab your levels, consistent, you know what I mean, reviewing, analyzing. And a lot of people kind of misconstrue when I say review. Don't just review what you did right. Review what you did wrong. Review everything that you did. Don't just review, oh, this is where I got in, this is where I got out. Okay, well, explain to me, why did you like it? Explain to me what was your stop loss before you got in. Explain to me what was your target and meaningful thinking on why those were your targets. What are they? You know, if it just takes zooming out and saying, oh, this is an emerging candle, or this is a halfway point, or this is a pre-market high, this is a previous day close, label it. Over time, you saying that out loud to yourself is a reiteration. The best form of memorization is breaking things down further, re-explaining. And you could say even teaching is kind of in that area, and that is. Teaching is the greatest form of memorization because you're being forced to explain something down in a more broken down manner. That's exactly what you should be doing to yourself every time you take these trades, every time you're reviewing these levels, every time you're taking a mental trade. You should be taking more mental trades than real trades. Sorry, I'm having a brain fart. So hopefully that makes sense. Let's go to NVIDIA, though. We only got 3 more to do. Stream's actually still a lot shorter than I thought it would be. I was trying to aim for like an hour and a half to 2 hours, and it looks like we're going to be right there. All right, so let's start from here. But during the week, we stream 45 minutes before market opens, and I stream for about, I keep saying 2 to 3 hours. It's so much longer than that. Our average stream has been like 4 hours plus lately, so been pretty long streams each morning, or each day. We go pretty much into lunchtime, mid-lunchtime for New York time. So definitely be sure to join on the streams. Me and my really good friend Devin, we go over a lot of these levels that you're seeing me chart now, plus the smaller time frame levels you keep seeing me highlight and look over when I jump down to the smaller time frames. We visualize those levels. We talk about different trade ideas between those areas. We talk about sector rotation. We talk about, you know, good market movement with the weights. You know, seeing Apple pop and seeing Microsoft pop higher, that makes me want to look at other tech tickers, seeing that they have a higher probability of moving higher now that the king and queen of the market want to move higher. You know, just seeing that, you know, and over time, this is stuff you'll learn. You can't expect yourself to see it once and be like, oh, I'm a pro. You know, I got this moving forward. No, you're going to need a little bit more practice, which is totally fine. Everyone always does. I don't care if you have 10 years of doing the same system over and over again, you still need practice. Never give up. Never stop maintaining. Again, once you get past, taking trades and you feel like you're past that part of trying to succeed, you have good confidence, you're not done. Just because you have confidence in what you do doesn't mean you're done. You still have to worry about maintaining. Maintaining can be some of the hardest part of trading, which it looks like I didn't add enough levels to the downside. I don't know why I did that. Just get a couple more and then we'll stop it there. That, and bam. Alright, that's fine. I was wondering why I was a little lopsided over here. But go back through, review, add those previous day levels, look out the next day reacted, so on and so on. So going into tomorrow, NVIDIA will be a pretty easy one to look at. It's pretty much still in its range. Of course, how we react to overnight and how we react to any kind of news during the week will affect pre-market, but this will help us out kind of viewing the levels. So I'm catching up. Bueller, can't stay and watch. Just wanted to say what's up. Have a good rest of your stream. See you, Zeke. Thanks for joining in. That's why I'm doing my trade recaps with entry, exit, and thought process, helping me for sure. Good stuff, Chris, and I'm very happy to hear that. Again, that's a huge step in the right direction for you and anybody else who takes that advice. It's very mature of you to say that too, so I appreciate you dropping that. Josh reminds me of a passionate teacher who is stern and compassionate at the same time, like one of those anime teachers. Sorry if I'm off topic, but when using these levels for day trades, how far out on DTE and strikes do you go? A lot of the time, you have to kind of do that on personal preference. So if you're taking a gamble, you probably shouldn't take any gambles in general. But if you're taking a gamble, of course, you're probably taking like a same week or a 0 DTE. Let's say it's like Monday or Tuesday. It's probably not bad to grab a same week, but you have to understand you have a very risky time decaying asset. That's what it is. What you're trading is time, so if you're just going to scalp, that's probably not that bad because you're not going to be sitting in the trade that long. If you're grabbing a day trade and it's going to probably take a little longer, you want to be able to have strength in your contract to move through a sideways move or even a day of reset, then you're going to have to grab a next week contract or a very strong at the money contract. It really kind of depends on you. Another great deal. And we talked about this pretty heavily on Friday as well and Thursday, just because it was more of a questionnaire day for those days because the market wasn't moving too much. But it is kind of personal preference and what are you aiming to do? A scalp doesn't really need to focus on grabbing a strong contract. You just need to grab a good contract, get in, get out. You don't need to be sitting there that long. A longer day trade, those 80% we like to look at, you're probably going to want to grab a good strong contract and then you don't have to worry about any kind of things hitting you. But just understand when you are trading scalps, you have to understand the gamma increase is the most important. Everybody always focuses on delta, theta, rho, all that crap. Gamma is the biggest thing. When you're trading from at the money to in the money, that gamma boost that you get is what feeds your premium. So that's why you want to focus on good contracts. And even if they are more pricey and you can't afford them, that doesn't mean you can't trade them. That just means you need to mental trade them for a while until you do save up enough or grow confidence enough to take those kinds of trades. You shouldn't just jump into them because you think you can do it. Give yourself a little bit of time. Swing's a whole nother question. Discipline is the verb most of us degens been to work on. I'm new to this group, and this lesson has been very helpful to my style of learning. Thank you. No problem, Freedom. Very glad to have you. And I appreciate you guys dropping likes on the stream. You guys got 82 likes on a Sunday stream. I would never have guessed that, so I appreciate the amount of support. But let's finish these charts up. So going into tomorrow, it's easy to say, above 175, 176.20s, we can look for break above. Below 169.70s, we can look for break below. But we didn't add the rest of our levels. We have the previous day open. Previous day highs are basically marked. Previous day lows are basically marked. So that's kind of our trade plan right there. This is kind of an in-between level. We can look for possible upside movement, possible pump to see a rejection back down to this level, in which we can watch for this to break. If this ends up breaking too early on, we can watch 167.75, see if we can base there, or see that's where we're going to get our next drop. So it really kind of depends on what we get, how we open, where we open, and what levels are around. And we'll, of course, go over that in the morning. I always do my best to talk about pre-market prep, so you guys have a really good breakdown on what's possible, both on upside and downside, and what is needed to do that upside or downside. I always give that out just because I want everybody in pre-market prep to have a really good broken down description of what's possible. Therefore, when it does happen, you're not getting slapped in the face or blindsided. You understand that, okay, well, that happened. This is what we're looking for now. Okay, this happened. That's what we're looking for. There's always something next. You're never having to well, I don't know what to do now. There's always another step. So we got two more. Netflix, another one that I have to zoom out pretty far for. All right, so 320. We're going to be over here in 2018, 2019, 2017, 2018 really is what I'm focused on. So let's start from down here. We'll go from like here. Of course, I zoom out and screw myself. There we go. And sorry for the long rants, guys. I try not to add too much filler info. I try to get straight to the point so you understand what I'm focused on. But I just really do care about you guys. If I didn't care, I'd just be very quiet and I would just do my charting. But hopefully you guys take a lot of advantage of the information I'm giving out today. I really hope doing these once a month will help people out, because the Sunday levels aren't something you should have to mess with too much. You shouldn't have to re-add these every single day, every single week, but it is really good practice. If you want to take that initiative into your own hands, please do so. Learn to get not just these levels, but to consistently do them over time, review the smaller time frame, and then in the morning, adjust to how the pre-market ends up hitting us. So if we get a higher pre-market, of course, you're going to need to add some levels to your PMH, PML. Damn, we still have a large range right there. Hold up. I gotta fix this. This is gonna look very tedious. Alright, so pretty big range between 315 and 325. It's about a $10 range, so we need to fix that. This should give us a $5 level in between. Yeah, like 320. That's perfect. Whoops. Remove. There we go. Okay. Let's add these levels here. We're pretty far above price. I don't need to go much more. I like to do it for practice. Regardless of how many times I've done this, it's always refreshing to kind of do the levels over and over, just to kind of keep me in the method of it and the routine. I feel really refreshed, kind of clearing these charts now. Okay, I really don't need to keep going. I'm just kind of a level addict now. Whoops. There we go. Go down to the smaller time frame, and we can see, well, of course, form our trade plan in the morning on that one, depending on how pre-market high is, pre-market high, pre-market low is. But previous day open, I added the wrong level. Previous day highs, of course, is a combination of the wick and the meat. And we have our previous day close kind of sitting in this general area as well. So we'll definitely have to pay attention to the pre-market low tomorrow. If we end up getting it kind of down here, that'll probably be our initial breakout to the downside level towards 315, possibly 312. And then, of course, above 322s, 321.25 really is probably what I'll say. That'll be a good break above towards 323, 325. Sometimes I like to give in-between levels that aren't on here just to give you guys passive targets for when you do get in these plays. Therefore, you don't feel the need like, oh, I have to make it to 325. Like, no, take some small profits at 323. Then you can leave runners to 325. And if you're only in one contract, sell at 323. And over time, as you grow your account and your confidence and your knowledge, you'll end up being able to make it to those farther targets with discipline. You won't just be randomly holding or looking to hold with hope or wishing. You know, it's not emotional. I think square's another one I have to zoom out pretty far for. So I see we're at about 62s. Zoom over here. Or 64, sorry. So I'll start from here, and I'll finish here. Oh, and by the way, if adding these levels and adding labels on them helps, I have seen a few of my members do this, where they add the name and they'll type out what it's from, what is it, and they'll even color code it depending on time frame. So if that's something you want to do, be sure to take advantage of that. I don't do it because I like how I have it, but I do see how some people enjoy it. Looks pretty cool. Plus, who doesn't like being organized, right? Oops. And see, saying Square has a large range is different than saying Tesla has a large range, where it's like $5-6. Square's large range will be after like $3. So, again, also a little bit different depending on what stock we're charting. Go down to the 5-minute, and so you have everything ready for Square. So going into tomorrow, probably pay attention to not just the previous day highs, But if they break that, we don't have much movement to 66.20, so you'll probably have to also watch out for this level for more break to the upside. Also, depending on how we open pre-market, I'm trying not to leave that out. Previous day open kind of lines up in a little range here between 62.70 63.20, so this looks like a general area to look for more downside movement without even having to look at it that long. And we have kind of a pivot point here between the previous day close and the 64.50 level where we can look for in between. And also, not just this, if you move over to here without while ignoring that, you can see price actually popped above and held this range for a very long time on Friday. So actually, it makes sense to have this here as well with the previous day close, that it just kind of pivoted right there. So we'll pay attention to how it trades around that area. But overall, guys, that's everything. That's how we like to trade. We really do focus on just levels, consistency, routine, but also navigating the levels, being able to navigate with just volume. You don't see a single indicator on my screen. You can use the 9 EMA, the 8 EMA is cool, or the SMA version of those. The middle VWAP is nice. The 30 TEMA is nice. These are 4 indicators that I like for looking at short-term confirmations, but they should never overthrow your confirmations of levels or volume. They should just be kind of a secondary confirmation or a guidance even, as you'll hear some people say in my streams. See you later, E. Thanks for tuning in. The same exact way, Roman. I would chart it the same exact way. You wouldn't use the after hours data. Closure is different, but the levels are still the same. You would never use after hours info. You can do it the exact same way. There is no difference. I'll show you right now. Actually, I might already have it done. No, I don't. I cleared my charts the other day. So I'll show you. For day trading, that is. SPY futures, though, who asked that? E. I would more focus on, or who said that? Roman, my bad, not E. Roman, I would focus on doing this on the weekly or even the monthly. I wouldn't do this on the daily for day trading levels, for SPX as well, but it does work the exact same way. So here, let's start here. So we have 3960s here. I'll just kind of start in a general area and get some levels. Kind of screwed myself there. 3960s. So I'll start like right here on this breakout. But it works essentially the exact same way. Everyone's always asking me, can you use this for other stuff like futures, commodities, currencies, cryptocurrency? Yes, you can use this for that. There's no difference. The only difference is mindset. You're trading a different market. So, of course, you're going to think like, oh, well, it's different. No, it's not. It's the exact same. All these markets use volume. All these markets use exact levels. It's not anything different. It just looks a little different. It may even feel a little bit different, but it is essentially the same thing. But that was a great question, though, Roman, because some people ask that and they hear my answer and then they ignore it. But I'm very glad to help you out here. Let me get a couple more levels below. I can see I probably need a few more below. And then a halfway point between here and here. Roman, you're still here, right? So you can see it's the exact same. Just because they have extended hours, that's totally fine. See at the bottom of my screen where it says 0, that would be the start of your pre-market. So pre-market low for this day. Well, here this isn't really a good example because we had that news come out. Let's look at this one. So where would pre-market low and high be? Pre-market low would be way down here. So here's your low of pre-market, which if you find a pre-market low and a historical level, what I like to do is combine them. So if I see this is the low of pre-market, where am I at? Right here. So if I see this is the pre-market low and I have a level here, I'll just highlight both to give me kind of a combining factor look of it. And then vice versa for the pre-market high for that day. Where was that at? Right here. So I would highlight that and probably the pre-market high level. So I'd probably just highlight both. And this is why I say nothing is 100%. You can see, this is kind of a longer topic, but last week was actually kind of easy. I'm not trying to sound cocky or anything, but last week was very easy to call out that the last few days of the week was going to be kind of boring or range tradey. And I was very, very aggressive with pushing this on you guys. I was very big on pushing on you guys that you probably shouldn't trade much, or you should trade very light, if at all. The last 3 days of last week, just because we have sold off straight to this big area where we sat for multiple days of support. So this is what kind of led to me believing that, okay, we really don't need to trade these next couple days. If anything at all, just trade very light. And that worked out to our favor because we saw that the market wasn't favorable. We're trading in anticipation of the bigger news. So of course you don't need to be looking for these huge moves that are gonna definitely happen. No, it doesn't have to definitely happen at all. We could trade in a range and nothing happen. Then you get caught with your pants down and you're missing good trades, or even worse, you're putting your money on the line when no good trades are happening. No problem, Roman. I just wanted to make sure you saw that because there is a little bit of a difference. It's not that much, but the consistent routine is the exact same. It doesn't mess with it at all. Crazy to plot all the levels on a bigger time frame from past price and see it all line up on the shorter time frame. Yeah, it is crazy, and it's just kind of a wild technique too because it really gets you in the sense of looking at things a little bit differently. And then that's why I always tell people, don't just zoom into the smaller time frames and get lost looking at this. Don't get lost just looking at, the 5 minute. You'll start to figure out, okay, the bigger time frame actually empowers my smaller time frame trading. The more you start to look at it, the more you'll start to realize, like, wow, this is just helping me more. No problem, Josh. Thank you for tuning in. Totally fine, SF. And it's not like you and me even butted heads. If you have an opinion and I have an opposite opinion, great. I'm not going to sit here and be like, oh, I was right and I always knew I was right. Neither should you. You took a bad trade. I didn't. Whatever. Next week it could be the exact opposite, So don't ever judge people. Never try to push your conviction onto others. Just because you're bullish doesn't mean I have to be bullish, and vice versa. So try to also be open-minded. Try to be non-biased, open-minded, always ready to take a hit and be able to move on past it. Always ready to, accept criticism or not, give it even, and not do it in a form that kind of is aggressive or bullying onto somebody. We really are here to work together. And thank you guys for all your time. Can we get 6 more likes to end the stream with the 100? If not, that's totally fine. Yeah, stay humble, what D-Ted said. No problem, SF. I always like to be positive reinforcing. I really don't understand why you'll have groups out there. And it's disgusting what I've seen being an owner of a group. But I'm going to end the stream there, guys. The stream's starting to lag a little bit, so this is a perfect ending time. I'll see you guys later on. I'm going to go ahead and end it here. Hopefully you guys have all the same levels. I'm about to send a message out that drops all the links to these levels if you have Think or Swim. So we have the exact same TA. But I'll see you guys later on. Drop a like on the stream. I'll see you in the morning, 45 minutes before open. Thank you guys again for this stream. I appreciate each and every one of you.